Hey everybody, what's going on? It's Travis here with JT Wealth, and in today's video we're going to be talking about the biggest SPAC ever, who it's between and why it's important. So let's get into it. Alright everybody, welcome back. Thank you for joining us. If you're new to the channel, we appreciate you checking us out. Hopefully you find some value in today's video. If you do, consider giving us a big thumbs up for the video and subscribing to the channel as well. And of course, if you were here to see Julie, don't forget you check her out over on the TipRanks YouTube channel, where she does her pre-market morning update videos Monday through Friday, as well as some other update videos and how-to videos for the platform over there on the TipRanks YouTube channel. So don't forget to check her out. So like I said in the intro, in today's video, we're going to be talking about the biggest SPAC to ever hit the market. Estimated at $40 billion, this company is pushing out a super app. So I'm excited to get into the details and show you guys what this company is all about, so stick with us. And now before we get into which two companies make up this amazing reverse merger, don't forget to check out the links in the description section down below. It really helps out the channel. There's options to join our Patreon group, which will give you access to the Discord channel, which is where we have a lot of like-minded investors talking about stocks, talking about financial literacy and their goals of financial freedom. So it's a fantastic resource for new investors all the way up to more seasoned investors. And whether you're looking for your first ever investment platform, or maybe your fourth or fifth to just diversify which platforms you're using and how much money you have in them, you can use the links to Webull, M1 Finance, Robinhood, or BlockFi, all of which provide free gifts to you for signing up. So consider checking those out down below. Alright, and let's get right into the first article talking about which company we're discussing today for the Super SPAC. And this article comes from Barron's. It's titled, Asian ride-sharing company Grab is going public in a blockbuster SPAC deal. SoftBank, Uber, and Toyota are among the winners in today's deal. The Singapore-based ride-sharing company Grab Holdings has announced a deal to go public via a merger with the NASDAQ-listed Special Purpose Acquisition Company, or SPAC, Altimeter Growth. Grab said the transaction would value the company at roughly $39.6 billion and will be the largest SPAC merger ever. But Grab does a whole lot more than just ride sharing. Grab Holdings, or commonly known as Grab, is a Singaporean multinational ride-hailing company headquartered in Queenstown, Singapore. But in addition to transportation, the company offers food delivery and digital payment services via their mobile app. So now let's take a look at some of the actual details making up this SPAC. So Grab will receive about $4.5 billion in the transactions, including cash held by the SPAC and a $4 billion private investment in public equity offered in connection with this merger. The Grab deal with Altimeter ticker AGCUU, is pending, and it's speculated that the combination would be worth about $40 billion. The company is going to trade on the NASDAQ under the symbol Grab, and the deal is expected to close in July. So as you can see here, this image straight off the Grab website, it's touching on the first of several of their opportunities, some of which are in deliveries, so they have food, grocery marts, express package shipments, etc. And it goes on to say that Grab has a 2020 adjusted net revenue of $1.6 billion, which is up from the $1 billion they made in 2019 and $400 million back in 2018. The company's projecting 42% compounded growth through 2023 when it anticipates an expected revenue of $4.5 billion. Grab says it has about 72% of all ride-hailing market in Southeast Asia. They have 50% shares in the regional online food delivery market and 23% of the market for digital payments. They estimate that the addressable market is going to grow to $180 billion by 2025 from the $52 billion it was at in 2020. And here you can see they show they have mobility and financial services as well, showing they take rides or they give rides. They have payment and insurance options all in one app. But the app does even more than that, having some miscellaneous or other opportunities as well. And those include hotels for finding and booking amazing stays, getting gift cards or providing gift cards to somebody, as well as earning rewards points for your benefits for all of your transactions. So after the offering, Grab is the largest investors, or their largest investors will include SoftBank Vision Fund, which is a $100 billion venture portfolio run by Japan's SoftBank Group. They have an 18.6% stake. Now the number 2 stake in Grab is Uber Technologies. So obviously Uber sees something of value in Grab's product and with the way they're performing. So the third is Didi Chuxing. I could be pronouncing that wrong, but that's China's largest ride-sharing company, much like Uber. They have 7.5% share in the company. And lastly, you have Toyota Motors with 5.9% of the company. It's important to note that Altimeter's sponsor shares are subject to a 3-year lockup agreement. Now, I found a second article on CNN that goes a little bit more into why they decided to run with the SPAC, why they did it in the US, and some of the other opportunities within Grab. So like I said, this article off CNN Business, they say, when asked why the firm chose to go public in the United States rather than in Southeast Asia, Grab's co-founders said that the company wanted to tap into the largest investor base. For us, the US listing is important because it gives us access to the widest global base of liquidity. It goes on to say, in recent years, the firm has set out to cast itself as the provider of a super app, letting users do everything from booking rides to taking out insurance and loans. And its business has swelled to reach over 25 million monthly active users across nearly 430 cities in 8 countries. The company is comparable to a mashup of Uber plus DoorDash plus Ant Financial, all in a single app. And that's, of course, according to Altimeter Capital CEO Brad Gerstner, probably why he's so keen on making this SPAC a reality. So all the details and the numbers and everything sound fantastic, but when I started thinking about the company as a whole and realizing that yes, they're opening and going to be on the US stock exchange, but they're not a US based company. So I wanted to look a little bit closer into Singapore and seeing what their economy is based on. So first things first, I went right to the population of Singapore. Evidently in 2019 to 2020, they have roughly 5.7 million people in Singapore. And then I looked at their related statistics as far as their GDP goes. Their GDP in 2019 was $372.1 billion, which if you look down below to some locations similar like Malaysia, Thailand, and all of Indonesia, it is far in excess of the areas local to it. Then I considered which industries are driving the economy, and Singapore's largest industry by far is the manufacturing sector, contributing 20 to 25% of the country's annual GDP, with key industry clusters in Singapore's manufacturing being electronics, chemicals, and biomedical sciences, logistics, and transport engineering. So their 3 major industries, of course, are agriculture, manufacturing, and services. So I figured those are really strong industries and they have a decent population. So this really could work. But then I wanted to see, what is the history of the economy as a whole? Is that economy working based on the industry and population? That's when I found this article, What Makes the Singapore Economy Tick? And it says the robust Singapore economy drives thousands of global professionals to its shores each year. They're a major financial hub in the Asia-Pacific region, and Singapore has long earned a reputation as one of the world's most advanced economies. In 2017, Singapore was ranked as the world's 2nd most open economy by the Heritage Foundation's Index of Economic Freedom, as well as the world's 2nd most pro-business regime by the World Bank Doing Business report. It says, today the Singapore economy is one of the most stable in the world, with no foreign debt, high government revenue, and a consistently positive surplus. So just based on a couple quick Google searches and some articles, I was able to discern that I think this is a fairly strong company. What they're bringing to the table has a lot of potential. It's like Uber plus all those other things, right? It's a super app. And if we go only based on Uber, if we look at Uber's IPO, they were the largest in 2019, right? So now this company is approaching the largest ever, probably the largest in 2021, we'll yet to see. But in 2019, when Uber came out, they came out about $40 a share. Today, they're over $60 a share, roughly about 45% increase in the time that they've been a publicly traded company. So I think 45% in less than 2 years is a pretty strong number. And if Uber's investing in them, they believe they're a strong company as well. So I anticipate this company, Grab, doing exceedingly well, but we'll have to find out, right? All right, that's pretty much it for you guys. Real quick, just wanted to bring that out for you guys to look at and consider, and then start your own due diligence, okay? So that's a good point to stop and say, I am not a financial advisor. I am not your financial advisor. I am not giving you stock advice. I am not telling you to buy this company. I'm not telling you not to buy this company. What I'm saying is it is coming out. It is going to be the largest SPAC ever, and it is certainly something to catch your attention and start your investigation into this. Do your own due diligence before investing any of your hard-earned money. All that being said, thank you so much for joining me today. I hope you found something of value in today's video and it kickstarted your own interest into Grab and looking into their SPAC as it comes out shortly with Altimeter. So thank you so much for joining us. I hope you have a wonderful afternoon. Bottoms up.